Everyone, welcome to the stock specific class here for Thursday, February the 16th. If you have any questions during the week or any questions that I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. I'll be happy to answer those for you. Also, if there's any audio problems, if you notice any clicking or anything like that in the audio, make sure you let me know. I can dial back in, and usually that takes care of the problem. I just can't hear it on my end. All right, let's get started. Now, I do want to make today's class more about the stock picks. Now, that hasn't always been the case in the last few months, just because when you're in a bear market, there aren't as many picks to go long on, and so we've kind of done double market update type classes. But now that we're starting to see a little bit of a shift in trend here, although I will continue to reiterate that I'd be cautious. I don't quite trust this rally, but there again, you can't argue with price. You can't argue with what the market is actually doing. That's very dangerous to have an opinion opposite of what price is actually doing. But that doesn't mean you can't be cautious as you're buying in. And you can't make decisions. You could decide not to load up in these conditions, kind of ease your way in case it's a little bit of a sucker's rally. And so there are strategic things you can do. Now, you may have a different opinion. You might believe that the market's bottomed and this is the bottom, and then you're going to go all in, and that's fine as long as you have a plan for your trades in case that doesn't happen. You just always want to make sure that if you do get one of those big, massive sell-offs, they don't happen very often. But when they do, they're devastating. Especially if you're all in long, you just want to make sure that you're set up to where those don't destroy you. You're not, because like I said, they do happen. And what you can do is you can recognize, when you're in less bullish conditions. I'm going to talk a little bit about that today when we look at the chart. Although the market has moved higher this week, it's sluggish. It's showing a little bit of buying exhaustion. Being able to recognize that can help you make some of those decisions, even if you are all in. Maybe you see that the market is showing a bearish behavior, or could be showing a bearish behavior. You could buy some protective puts for your long positions and things like that to help reduce the risk where it wouldn't hurt you too bad. So anyway, let's get going here with the direction alerts. Now, not much to really talk about here. We're not at any extreme level. Again, momentum's just in the buy range, could continue to trend. Same with Brett. Sentiment is still extremely complacent. That continues to worry me. It's hard to believe the market can rally significantly. Doesn't mean it can't crawl forward, but to rally significantly when complacency is that high. Buy-sell ratios, again, come close together. There's no overbought or oversold extreme there. This sentiment indicator is pulled back a little bit. It wouldn't take much for it to get up to that extreme, but still they're showing some room to where it could run. Now, as far as the overall market conditions, let's take a look at the chart of the S&P. And let's go to a 3-month chart because I really want to zoom into this week. So we had the bullish reversal candle here on Friday. Monday was a good solid day, although the volume was a little on the lighter side. Remember, it was ahead of that CPI report coming out on Tuesday. Tuesday, we had an indecision candle. We opened lower. So here's where we closed on Monday. We opened lower, traded down at first off of that CPI number, and then managed to come all the way. Well, actually, we traded higher as well, but then came back and we closed basically right where we closed on Monday. So that's a classic indecision day, up and down, but closed right where it did the day before. It's important to recognize that behavior because that, when you sit back and say, well, what's going on here? What is the market thinking? Do they like that CPI report, or they don't like that CPI report? Well, based on that candle for that day, the answer is we don't know. The market is saying we don't know how to interpret that CPI report based on the price action, the price behavior. So, if you came out and said, man, the market really loves the CPI numbers, that's not what the price action is saying. Or if you came out and said, oh boy, the market really hates that CPI number, again, that's not what the market was saying. The market is saying, I don't know yet. Now look what happened on Wednesday. We opened lower again. And now there's two things to look for here. Yes, we've opened lower on these days, and it's managed to close up from where we've opened. So it is showing that buyers are buying the dip. We opened lower, traded a little bit below that low, but came all the way up yesterday, closed near the highs of the day. We did close higher than Monday and Tuesday, but barely. But that was a behavior of buying, that the market is buying the dip. That's the same thing I was looking for this morning when I saw the futures numbers before the market opened. It looked like the market was going to open lower. Sure enough, we did. We opened below all the price action from yesterday. But there again, bought the dip. We've come all the way back up. But we're still lower than where we closed yesterday. I don't know if we're going to get back up to there by the end of the day or not. But what this is showing is it's showing buy the dip behavior. Okay, so that's important to recognize. Traders are buying the dip, but it's also showing buying exhaustion, meaning they're buying the dip, but then there's not additional buying to go beyond that. And so a lot of times what that is it's the day traders or the short-term traders. They're recognizing that behavior. The market, people are buying the dip. So anytime the market drops at the open, they're buying, but they're only buying to cash out on that quick move that they're anticipating from those people that are buying the dip. They're pushing it up and they're getting out. It's showing that there's not the additional big institutional money that's building a larger position. And that's what you need for the market to continue to go forward. Otherwise, you're just going to move back and forth sideways. And you're going to have the short-term traders. And that's where a lot of the volume would be in that situation, is on those shorter-term trades. I'm not saying there aren't professional traders that don't do short-term trades. In fact, that's what those algorithmic traders are designed to do, is to get in and out of trades in a fraction of a second before you can even blink, and just grab all those little pennies that are there, and just those pennies add up. You do a million trades over an hour or something, and or it's probably even more than that, but a million pennies in a certain amount of period adds up to a lot of money over time. So that's what's going on there. Is it's a lot of that short-term back and forth stuff. Now, so how do we interpret this? Well, obviously, let's back out a little bit here. We've been looking at this as being a correction within this uptrend that we've had since January. Now, on Tuesday, I was talking about possibly this was an ABC pattern right here, and sure enough, on Monday, it looked like we were poised to take off from there and move higher. But now that we're still kind of sluggish right in here, what I'm worried about is this is maybe just wave A. This is wave B right here, and maybe we come down a little bit further for wave C. It doesn't have to do that, but even if it doesn't come down for a wave C, if it does go higher because of this sluggish behavior, what the danger is that you break out of that range. Because whenever you see a stock moving sideways, you want to pay attention to directions moving before it moves sideways. That's where it's more likely to go after it's done moving sideways. Doesn't mean it has to make a big move after it's done moving sideways. It could barely break out and then go into a larger drop or a larger correction or whatever's taking place there. So, if you look at it, back out and look at just what's happening here is we've got basically 2 weeks where the market isn't going anywhere. And again, that is the market saying, I don't know which way I want to go. I'm not showing a strong move in either direction. Now, remember, over that period of time, we've had the Fed meeting, we've had the jobs report, we've had the CPI report. Today was the PPI report. I mean, at some point, the market's got to tell us what it thinks from all that information that it's been gathering. And right now, it's still kind of stuck in this range. Now that could last for a while. One of the things I talked about a few weeks ago was that I was this very point that I could see the market moving sideways for a while because of the fact that the bulls weren't strong enough yet to push the market much higher than they did off those January lows. A lot of those January lows, remember, were the short squeeze. It was the people that were short the market had to get out. They have to buy to get out, and that buying fueled that sharp rally. Now short covering rallies are tough to time. So if you missed it, a lot of times if you're in for a short squeeze rally, usually it's luck. Usually you just are in the right place at the right time. If you want to try to predict short squeezes, and good luck. I've tried to do it. I even tried to do it as recently as the meme craze a couple of years ago, when that's what the Reddit traders were trying to do. They were trying to find stocks with high short interest and then squeeze them, and that's what GameStop was an example of that. AMC was an example of that. But the problem is that if you're trying to time that, anyone that's tried to time that next squeeze on remember that GameStop one was historic. It went from $5 to $500 or something like that in 2 months, or what, I can't remember how high, but it was ridiculous. It was incredible. If you got in at the beginning of that, got out near the top, you were an instant millionaire, if you had enough in there. But I mean, that's a once in a lifetime type thing. If you're going to try to go out there and time those, well, a lot of people did. They started to find, well, where's the next one? What else? And they started looking at all these stocks that had high short interest, and they got in them, but they didn't go anywhere, or they didn't go in the, if they were using options, they didn't go in the time limit of the options, and they ended up, and so the bottom line is, if you catch one of those moves, a lot of times it's a lot of luck behind it. So I wouldn't be trying to build a strategy around it. But that's what fueled that rally off the lows in January. Now we're just in a phase where the market is trying to figure out, because again, the news this week has not been good. It gets back to what I've kept saying, that the market rallying doesn't make a lot of sense to me, just because the Fed is likely to continue to keep those rates up, and the market hasn't priced that in yet. That it's rallied off of the thought that inflation peaked and it's going down. Well, we're finding that it's actually creeping back up again, and everyone can see that. If you've gone to get gas lately, gas has gone up quite a bit. From where it was a couple months ago. Grocery store, you're still paying $8 for a dozen of eggs. It used to cost you $3 or whatever. And what happens too, and I've talked about this before, and I don't want to spend a lot of time on macro stuff, but you probably recognize it in your own lives, that your discretionary spending is getting squeezed. If you have a budget, you're noticing that you're going over your budget. Now, if you're well off or comfortable in your life, you can handle that overage on your budget. Maybe you don't take your yacht out an extra day to make up for some of the extra expenses or something like that. But for average people out there that are living paycheck to paycheck, it starts to really squeeze them, and we're seeing it in the credit numbers. People are putting money on credit, the groceries on credit. Now, when they do that, they're not doing it because they're being, they're not doing it for, boy, I want this brand new TV. throw it on the card. They're doing it. They're doing it because they're buying food, or they're buying stuff that they're just trying to get by. They're like, okay, if I can put it on the card this month, hopefully inflation will go down, or my check will be a little bit higher, and I can make up for it. And they're getting squeezed at some point in time. That credit card's going to max out. They don't have another source. And what I was saying a few weeks ago was, when this happens, it's sudden. It's we think of it as on an individual basis that it's only happening to. You might think it's only happening to you, or it's only happening to a couple people that or what have you, but it's happening across the nation. So probably about the time when you're maxed out on your card or you lose your job. That's another thing, is people are losing their jobs. They suddenly don't have that paycheck that they're living paycheck to paycheck with. What happens is it's sudden, where suddenly everybody can't spend, and so people think they're going to see it. They'll be able to, if you have the belief that, we'll start to see it in the numbers, and then we can prepare, that we can see, it's getting ugly and the market's going to drop. No, what's going to happen is there's going to be some sort of trigger. Again, this is an unknown, so we can't plan for it necessarily, but there's likely to be a trigger, some news event that comes out that is where the market gets freaked out. Maybe it is a number showing that suddenly the banks come out and say, the delinquency on credit or on loans has spiked dramatically, and then that's when you get one of those big 2,000 point drop in the Dow type days or something like that, where it's like overnight the market has dropped. I mean, really, technically, what happens with these big drops is that, here we've built up this big run up for 2 months, or actually longer, 2 months. This one was 2 months right here from this low. But even if you take the October lows, the last, 4 or 5 months or so, you've made this big move up. And within a week, or two, you could be all the way back down to there. It can happen just so quickly. And so, people ask me all the time, why do you always seem to have a little bit of a bearish edge to you, where you just don't, you never go all in on the bull side? And the reason for that is, if you've been doing this long enough, you know that markets fall a lot faster than they rise. You don't get a chance. You just don't, in a bull run, I have a chance to gradually get in and gradually recognize that the trend is up. I don't have, sometimes you'll get those buying, like you did. We get those short squeezes where it takes off very, very quickly, and you feel, then it creates a buying panic where you that fear of missing out, or people start chasing it. That can happen, but most of the time markets go up gradually, and you can see those trends, and you can recognize when you're wrong, and it doesn't hurt you too bad most of the time. But if you're not having your eyes open for a drop and recognizing a lot of, now the good news is a lot of the big drops have signals ahead of them. We got a lot of signals right in here that we were going to drop, and that's what caused me to turn very bearish in December. And like I keep going back to the fact that we did see that move coming down right there. This was predicting another move down that just didn't happen. The lower probably move ended up taking place where it continued higher. But there were signals right here suggesting that a bigger drop was coming. Now, that's always been bothering me, though, because there are signals of a bigger drop coming right here, but we didn't have a big drop. That was a mild drop. If we start seeing signals up in here again, that maybe that's going to be signaling the much bigger drop that could possibly end up taking place. We don't know yet. But usually the point is, you get a few of those signals, and I try to teach them to you, because if you can recognize them, then it prevents that. At least you can lighten up a little bit or buy those protected puts, so when you do have those big drops, they don't kill you too much in your account. So, all right, I wanted to keep this pretty brief here on the chart side. Dow again, it's been moving sideways longer than the S&P. Nasdaq has been a little bit stronger, but today again you're seeing a little bit of that sluggishness. And you can see again, even on the last few days, opened lower. They were by the dip. Traders there worrying about, is this wave A, wave B? Remember, wave Bs are what characterizes a wave B is they tend to be sluggish and choppy, and we see buying exhaustion a little bit there, and so that's actually behaving kind of like a wave B. Doesn't mean it will be, but kind of acting like that. You worry about having another move down for wave C. Maybe it just pulls back to that breakout area. So that's something we'll keep an eye on. All the indexes are looking that way too. Russell, you see the sluggish move, although the Russell has moved higher. It's one of the few indexes that has gone to positive for the day. Now bonds, remember we were saying bonds were really they were right at that 618 retracement level. If we go any lower than that, it starts to shift the probabilities from less likely that we're going to move up, more likely we're going to go down. Doesn't mean it still will go down, but it starts to shift those probabilities. Now that we're below that 618 level, it makes it more likely we're going to get down to this level. Now, it could get down that level, and that could hold a support, but obviously it could break through that, and so bonds are starting to turn a little bit more bearish in my opinion. Based off of that. Now, again, that's just a probability shift. It hasn't gone to a lower low yet, but this makes this low right here pretty significant. We want to pay attention to that here in the next couple weeks or so. See if we end up breaking below that. And that would tend to be more bearish for the market because TLT going down usually means that bond yields are going up. Bond yields are going up because the bond market is anticipating that interest rates are going to remain high, or that the Fed may continue to raise interest rates, and so that's going to be bearish for the market right now. Gold, we keep waiting for it to kind of reverse here. It looks, I've been talking about possibly this is just an ABC correction. We got a little bit of a indecision candle on Tuesday, got a gap down yesterday. It looked like a little bit of a possible reversal, and then today we're moving up a little bit. We'll see if there's a little bit of follow through to that. I'll have to check the gold trades I have. Hopefully we haven't dropped down below any stops on those. Yes, I think if this is a correction, it could be done here pretty soon. It's also possible it could be a trend reversal. I haven't where this is an impulsive move down. That was corrective. This is somewhat impulsive right through here. Could it continue to drop? Absolutely, it's definitely possible it could do that. And a lot of it might depend on what the dollar does, because if the dollar starts going up, that could put pressure on commodities. Oil, still bullish on oil. We're still looking at this range, though. Remember, this is the upper part of the range, lower part of the range. I talked about on Tuesday about the government, U.S. government being buyers down around the support level to try to replenish the strategic petroleum reserve. Again, that's not a reason by itself to buy if it's down there, because it could dip below there. And there are traders that are aware of that, as professional traders are aware of that as well. They may try to push the price below the support area to try to stop people out. This behavior, though, is a little bit more sideways. So you had impulsive off the lows there. This is a little bit more corrective, but it doesn't looks like that could still move sideways for a little while, but it should. I look at it, oil working its way. It looks like it's going to work its way back up to this upper range the way it's behaving right now. That doesn't mean that you can't have back and forth. You can move sideways back and forth for a little while before doing that. But I'm still a little bit more bullish on oil and remain more. And a lot of the oil stocks, although they pulled back a little bit recently, they've been at the top of that sector list for quite a while. The dollar made a pretty big jump yesterday, and it opened a little bit higher today. It's trading a little bit lower than where it opened. So again, the question is this a trend reversal? You do have impulsive up, corrective. getting a little bit of a potential impulsive up through here. Is this going to lead to a bigger impulsive move, corrective impulsive, where you actually got the trend reversal, or is this just a larger correction, wave A, wave B? Maybe the dollar rallies a little bit more for wave C, and then it continues to drop down. This ties into what could happen with gold and oil too, because they tend to trade inversely to the dollar, so that's something to keep an eye on there. Now, if we come right back down again, and it could be this is a really short wave C, where this is A, B, C. If you come back down below this line right here, then that would probably make that more likely that was just a odd-looking corrective pattern, and that the dollar's back to trending down again. Hopefully, we'll be able to see that. Maybe not by next Tuesday, but later next week we'll have a clearer picture on that. The VIX, unique about the VIX is obviously it's very low. Again, I talked about that on Tuesday, that the VIX rallying from this low of a level is typically would happen in not even early in a bull market, be mid to later in a bull market, where it kind of bounces between 20 and 16 or so, back and forth that way. But we did spike up a little bit early when we opened lower. I thought that was interesting, but there again, I was wondering. I'm waiting to see what happens next. Are we going to see the buyers buy the dip? And we did kind of push the VIX back down. But again, it still comes back to the market being a little bit sluggish, and I got to be worried a little bit about that buying exhaustion. And so we're seeing buying exhaustion with the VIX down low right here. That's, I mean, and again, this is what you tend to see. You tend to see that VIX start to spike up, and you can see that it's getting ready to kind of take off a little bit. So I wouldn't be surprised if you get any sort of a decent pullback here, that VIX starts to take off. Although really it would need to get it probably above 23 to 24 up in this area here, where we'd start to, because a lot of these little quick drops that have spiked the VIX up have been actually buying opportunities where it's the market's pulled back a little bit and gone up. This latest one was just on that last pullback. I'm just going to pull the SPY up here. It was on this last pullback right here. And again, it looked to be a little bit of a buying opportunity. We rallied off of that. Now, what's interesting, I wanted to lead this on here with today's open. You wonder why I wanted to wait to see if they were buying the dip. It opened right at this little trend line I have that's connected these lows. So ever since we've had it's actually since this low right here, but basically since the beginning of the year, the January bottom, there's this trend line that the market has been following. I think if it breaks below that trend line, that it's much more likely at that point that this is a wave A, wave B, and you're going to get a wave C that pulls back here a little bit deeper. Maybe not much, but so that leads me into our discussion on trades. Again, we'll go over some nice patterns here, but keep in mind of those conditions. The way you can kind of deal with this is you can say, okay, I may add some here. If you're light in your portfolio, the conditions are still looking fairly bullish. You could add something that maybe you don't add too much, with the idea that, and you could build a watch list with these as well, that you're going to watch these. If the market can break out to above that previous high right there, it makes it less likely you're going to get that wave C down. It's possible, but typically if this is wave B usually doesn't go higher than the beginning of wave A. It can barely go higher. Sometimes we call that an irregular ABC pattern, where it barely goes a little bit higher and then it comes down, but it's barely. You start fiddling around with that, like it might be able to go like that much higher. That might be an example of a regular ABC pattern. okay, where it barely went higher. But again, that's rare. If you're not careful with this, what will happen is you'll say, oh, this is an irregular ABC pattern. That's wave A, wave B, wave C. No, it isn't. That was probably your correction. Maybe it was just a one drop move. That was the correction. This is the trend. That's your impulsive move, and you're in a trend reversal. This is an impulsive down, and you're in a trend reversal at this point. So be careful with that. That gets a lot of people that are brand new to ABC patterns. They don't have a lot of experience with them. If you want to really play it safe, just say, I'm willing, and I do this myself. I'm willing to get burned a couple times where that it barely breaks above the end of beginning of wave A, and it ends up being a wave B. See, in my opinion, if it breaks up above here, I'm expecting it to take off. Even if this was just a real quick drop right here, and I'm more likely to be right on that, by the way. And I'm willing to be wrong on the very rare occasion where it barely breaks out and it ends up being wave B, and I lose money or get stopped out because it comes down here for wave C, and then it takes off. I'm willing to get that wrong. Most of the time, it's not going to break above there. So if it does get above here, it's less likely, again, still possible, less likely that it's going to have that move down. Now, remember, it could break out, have a quick move up. That could be your impulsive move right there, and it could be done, and then have a bigger move down. But again, you could at that point you could look for some sort of bearish reversal candle or something like that that might signal that. Typically, you're not going to have a strong move up and then a huge move down. A lot of times, you're going to get some sort of an indecision day or a bearish reversal candle that'll signal that a bigger drop is coming. The only exception would be if there's some breaking news that comes out of nowhere. But so you can put these stocks in your watch list. If you break out above, then you could get more aggressive or start to get more aggressive. You know, so we're still kind of in that indecision range. So we want to recognize that market condition as we're making our trading decisions. So just keep that in mind. The reason why I'm prefacing all this is that I understand my responsibility. I've been doing this a long time, and I know that I get people coming in for the first time, or they've joined within the last couple of weeks. They have very little trading experience, and as soon as a ticker symbol comes out of my mouth, they go spend their $100,000 retirement money all in on that stock because Jerry's been doing this a long time. He's the expert. He knows this thing is going higher, and I'm going to make all this money and buy my yacht within the next 2 months. And that's just not how trading works. Trading is not about being right. These expert traders are not right all the time. They're experts in trade management, money management, and recognizing price action and the probabilities, and when probabilities are shifting, and when they need to, when the trade they thought looked good suddenly doesn't look good. That's where experience and success comes from. So be aware of that. Just because we're going over these stocks doesn't mean go jump in them. I'll try to point out what I like or don't like about them. A lot of these have hold signals where you could wait for them to go to a buy signal, a little bit of confirmation, or wait for a breakout as confirmation. But remember, we just got done talking about the market conditions are indecisive right now. We really could go either way. So that's why we do this market update, and we look first at the market conditions because we want to make sure we're not getting too aggressive in a market that is indecisive. Okay. All right. Let's first go to the new buy list. I'd like to start there. Now, remember, these have gone from a hold to a buy. But again, I'll point out some things I like or don't like about some of these patterns. I do like this first one, AVTE. I think we can go ahead and switch this over to signals here. And just that overall, remember that I like that impulsive, corrective behavior, impulsive, corrective, impulsive. This looks like a larger ABC correction right here. It looks like it's also pulled. So there was the previous high right there. It broke out above that high. It came back and retested it. You can also look at it like it's going up the right side of the bowl right here as well. Now this could be real easy to manage, what this is telling me is it should start to work its way back up to here, and it should actually exceed it if this is a true uptrend. It should go to a higher high like it did right here. Easy to manage right here because this would be a great stop area right down here. Because if it started to drop, well, then it's probably not on the right side of the bowl. If it continues to drop below here, it's dropping below the breakout area. That's not very good. It shouldn't be doing that right now. And so now if I'm just looking at risk from risk reward from here to here, that's just about a 1-to-1 reward to risk. I'd be risking about as much as I can make. But if I think it could break out and go higher, which again, if it does break out, you could take the top of the bowl to the bottom of the bowl and project that upward. There could be huge potential reward for that risk. Now, again, these moves aren't immediate, and especially when you're still in technically bear market conditions, you're not going to get big bullish moves quickly in those conditions typically. But that's what you can control. You can control the pattern, seeing the pattern, the management of the trade, the reward to risk expectation, and then you just have to kind of wait to see if it plays out that way. But I like that pattern there. I like the next one, LNTH. And again, those of you that have been around for a while know what I like about this one. It looks like it's maybe transitioning into an uptrend of going up the right side of the bowl possibly, or maybe an inverse head and shoulders pattern. Now there's your neckline right there. Would it hurt to wait for a little bit of confirmation if you break above that neckline? I think that would be very smart, because if the market breaks higher, this will probably break above its neckline. There's still a lot of potential to go higher. Again, you can take the top of the neckline to the bottom of the head, project that distance upward. You got a lot of resistance in this area right here. You could buy the breakout. If you buy the breakout, that probably means this low is pretty solid. You could put a stop below there. And there you go. You got a 2-to-1, maybe 3-to-1 reward to risk trade. And again, that's all you can control. Let me back out and look at a little bit bigger picture of this as well. Yeah, I mean, you've had a lot of, you could draw a trend line down here, and you broke that trend line. You've got a lot of support in here, which is below this recent low, but again, you had lower highs and lower lows through this move. Now that's why this could be important, because if you can break out, you do have what looks like a potential a higher low right there. And if you use any of these lower highs, it did go to a higher high. This is a more significant one though. If it can get above there, really, if it can get above there from here, it has all the behavior of a stock reversing back into an uptrend. And these are some of my favorite patterns. They don't look very bullish for someone that doesn't know what they're looking at. You say, boy, this stock's been going down, but they don't notice the subtle behavior. And again, it's subtle right now, and it's not confirmed yet. But that's where I want to get in. I want to get into some of these stocks that have been beaten down, and they're now starting to work their way back up. How many of you have done that, where you've looked at a stock, it came all the way down, and then it's doing this and doing this and doing this, and you're all the way up here, and you see it on the chart for the last year, and you're like, man, why can't I get into these stocks down here, and all that money I would have made if I rode that thing all the way up? Well, remember, when it's down here, it doesn't look good. It looks like it's in a downtrend, and nobody likes it. Nobody loves it at the bottom. You go out and ask a broker or an analyst out there. They'll say, "Oh, stay away from this thing. It's terrible." That's why you can't get in down here, because it doesn't feel like you want to get in down there. Now, it's hard to get in at the bottom, but can you recognize that behavior of when it looks like it's rolling over? So maybe I don't get the exact bottom there, but what if I get in right here with a little bit of confirmation that you're possibly rolling over into an uptrend, and then you just manage it. You have your stop in there, and then you say, okay, do your thing. If you're going to do it, do it. If not, okay, then stop me out, or I can keep raising my stop where when you finally are done with your run, I'll get a good chunk of that move. But that's the only way you can capture those big runs, is you got to be willing to take a little bit of risk. But we're not taking a blind risk. We're not looking at every stock that's down big and saying, okay, I got to bet that it's going to go back up. Think of all the people that did that with BlackBerry, the BlackBerry phones. Oh man, I had a BlackBerry one time, and it's now a $2 stock. I'm just going to buy it now, and it's going to go back to $300 or wherever it was at, and I'm going to make $1 million. No, you want it to act like it's going back up and it's improving, I haven't looked at BlackBerry. That just came to my mind. So maybe BlackBerry's already done that. Maybe you do want to jump into that now. I'm kidding. I haven't looked at that chart, but that's an example though of just just don't buy it because it's down, but is it exhibiting some behavior of reversing back up? Now, I think on Tuesday or last Thursday, I went over some of the patterns I look for. So if you want to go back and review those, I don't want to spend a lot of time here going over that again. The different patterns I like to look for when I'm going through these lists, because all these lists are doing is they're telling me these are stocks that are outperforming the other stocks out there. Now, they don't always have a great chart pattern or they're too extended. They've gone up too far too fast. I don't want to chase the move. So that's why I went over some of those patterns that I'm looking for, and this is one of those on this stock that I like. I like the patterns development. Although I said it wouldn't hurt to. In fact, I'd really recommend that you wait to see if it can break above that kind of neckline right there and give you a little bit more confirmation. And if it does, this is maybe one that we'll add to the portfolio. We'll keep an eye on this one. By the way, we can add this to a watch list here. I'm going to go ahead and add that. If you go up and click on this, well, first of all, you have to set up your watch list. I don't have time to go over that. There is a training on that in the archives there. If you go to the YouTube channel, we have a bunch of these training recordings on our YouTube channel. But click on this little green. Once you have your watch list set up, I'll try to do a class on it. Maybe I'll do that next week. I can show it pretty quickly. I just don't have time to do it today. But if you click on this little green arrow there, it'll ask you which watch list. You can set up multiple watch lists. I'm going to put it in my market update watch list, and then just hit save. And then when you go under your watch list tab and what did I add it to? I added it to the market update. Sorry about that. I need to add it to the stock specific class. Let's try that again. All right, so it says LNTH. Let's click on that green arrow. I'm going to add it to the stock specific class watch list. Click save. Now, what I was going to point out here real quick is that this is the normal process we'll do in these classes. We'll find some of these stocks, and a lot of them, when we go off of the indexes or off of the sectors, we're going to do a little bit of that today. I'm looking under the hold section, so I'm waiting for these to go from hold to buy, and so I'll be putting them in the watch list. I'll show you how to set up an alert to let you know when it goes from hold to buy. Now, this was already at a buy, so that's not going to help us here. We're waiting for it to break out. But that's usually the process. I got to go in and weed out this watch list. So don't write down these ticker symbols. These are probably about a year old. When we started to go into the bear market, I stopped building the watch list because we were in defensive mode at that time. And I need to go in and delete a bunch of these that I had in here. Well, actually, some of these were from the spring. Remember when oil was starting to take off? Look at, there's a lot of these that were from, so maybe I had this, I did add this, but anyway, I need to delete a bunch of these. Don't write these ones down. But at the bottom of the list, there's our LMTH right there. All right. Let's do one more. Oh, let's do one more on this, but I wanted to show an example. If I can remember what. Just a second. Yeah, so you've got kind of, again, kind of this bowl-shaped move right here. More importantly, you've got kind of impulsive down, impulsive up, and then it looks like you got a little bit of a correction. You're moving more sideways. Now, this could still be sideways for a little while. It could come back down, or even maybe this is wave A, wave B, wave C. Maybe it hasn't put in that low yet. There's a lot of support right through there. Let me erase some of these lines. So you look at all those days where it hovered right around here, and it did back here as well. So this is significant right here. It was resistance right here. We're back up at it. It's having trouble getting above it. So you'd want to make sure you get above that area. And this is where it's well worth your time to wait and be patient, because it's so many times it hasn't been able to do it. Could this be the time where it does? You want to jump the gun? Why? I mean, because it hasn't shown the ability to get up above there yet. This is how you lose money, is trying to guess this is it. I mean, think of all the times that they were, this is it, let's just get in. It didn't work, or where it didn't hold us. This is good. This is strong support. It's going to go up. It's going to go up. It's going to go up, and no, it tanked below it. Don't build strong opinions at these, or try to jump the gun at these key levels. Wait for it to break above it. But I wanted to show you on this, because I know what I wanted to show you on the 1 year chart here, because I just put in my notes 1 year chart, show 1 year chart. And sometimes I do this during my prep and I can't remember what I wanted to show you, but I remember now. So I like these patterns where it comes down deep and then it looks like it's starting to roll over. Now we have all we have here is for evidence is an impulsive move down, impulsive move up, and now it's acting more corrective. This low could be important. We want to see if that low holds. Obviously we showed this, we want to see if it breaks above here. But what I wanted to show you is, again, you see these examples of a stock that comes down, it starts to move up the right side of the bowl. And you see examples, I can show you examples in the past where it works, and you can see it work, and you can see why I like that pattern. But I also want to show you that it doesn't always, something that looks like it's rolling over and starting to move up doesn't always work. And we can go back a few months here on this one. Got a deep pullback right here. What happened? It started to move. It looked like it started to move up the right side of the bowl. Higher highs, higher lows. Looked like it's starting to go back up here. And then what happened? It didn't. It kept going down. Now, this wasn't a big drop, but it did have those characteristics of what I like to see. But this is why you have to manage a trade. I don't know if it's going to go back up to here. And if it does, it breaks out, it's probably going to go up about the same distance as the top of the bowl, the bottom of the bowl, and all that stuff. But there are going to be times where it doesn't. If you put your stop down below here, that was a pretty wide stop there. I could have put my stop below here. That's not much better. You could, and if I'm going back to this area right here, another thing you could use for a stop is you can draw a trend line through here. This is kind of what we've done with the SPY chart. I've got that trend line drawn on there. If we break that trend line, it's not good. You could put a stop below a trend line. But the big thing I want to point out is just because it looks like just because this looks like it could be turning the corner, this thing could be all the way back down here in 2 months, and you're like, nope, that didn't work. But if I waited for that breakout, I mean that this low is significant. It's gone to a higher high. That's a higher low. I could put a stop in right there because that's where I know I'm wrong. And then that's all I can control. This is what I'm willing to lose if I'm wrong. Here's what I can potentially make if I'm right. If all it does is get back up to that previous high, that's a 3-to-1 reward to risk. I can make 3 times more than what I'll lose. But why do we focus on that, by the way? Well, let's say I make $3 if I'm right and I lose $1 if I'm wrong. We're keeping the math real simple here. That would be a basic 3-to-1 reward to risk. I have a chance to make $3 more than I would lose. Let's say I'm only right 30% of the time, meaning I have 10 trades, I only have 3 winners, and I have 7 losers. I'm an idiot. I'm the worst trader in the world. Well, on those 3 trades that you were right on, you made $3 or $9. On those huge 7 trades that you were wrong on, you lost $7. With that horrific winning percentage, you still made $2 more. You're still growing your account. You're still making money. Now, if you're not that complete idiot and all you do is average and you're just 50%, that means 5 of those 10 trades you made $15. 5 of those losing trades you lost $5. You're making a ton of money. Now, we're not even talking about if your winning percentage is 60, 70, or 80%, which it probably won't be much more than that. Usually, you're hoping for about 50 to 60% on the good side, and it fluctuates. What it does, you have streaks. You could be at 80% for 6 months, and then at 20% for another 6 months, but it averages out. But this is the math behind it. This is the secret behind successful trading, is always putting yourself in a position where you can make more money if you're right than you lose when you're wrong. And we don't have to have all 10 of these work out. I just need 3 of them to work out. And that you learn that and you master that, and I have no worries about you. If you put all your focus on finding the perfect trade, and you ignore your money management, trade management, and the math behind that, yeah, good luck. I don't know what your results are going to be. I hope you're lucky enough to be really good. But the comforting thing about that with the software is I don't need to be good. I just need to be average, and I can crush it in my account. All right, over time. It can be a little bit of a slow process, but because you could have good years and bad years as well. All right, so let's get back to a few more here. Let's get into the sectors now. And I'm going to go into the top one here under construction. And we'll look at FLR, 96 strength rank. Now typically when we're in a bull market, I like to see a 98. I look first at the 98 strength rank and above. And then a nice pattern there with it. I will dip down. If I don't see anything I like there, I just start dipping down. Let's look at 97. Nothing. Let's look at 96. I don't like to go below 90, and even in bear markets, I don't like to go below 90. Now, I have done it. You might see some trades where I'm in the 80s, but usually it's because I really like the stock or the pattern. Both. I'd have to, and just because I like the stock is not a reason to get into the trade. I have to really like the pattern and like the stock, and then if usually it's just barely in the 80s there, I may take a chance on it, but. This is, and these are all holds. Go from hold to buy, but look, you can see a nice clear uptrend here. Higher highs, higher lows. Keep it simple. Higher high or higher low, higher high, higher low right here. Possibly higher low right here. Wouldn't hurt to wait this to go to a buy signal. By the time this goes to a buy signal, it's probably right up here. Wouldn't hurt to see if it could break out. That's a nice little pattern there. Again, showing kind of a little bit of a sluggish rally to, or like the rest of the market. And that's another reason why it might not hurt to wait for the breakout. It's acting like a little bit of buying exhaustion right here, the candles at least. Another one I liked under construction was a CHX. Now this has been moving sideways here, okay, and you can say, well, this is in a range here. And this is one I would wait on, but again, there's a couple things I like here. First of all, you've got a double top. And if you've been through some of my trainings in the past or for a while, what's significant about approaching that high again? Well, if you know history, and I'm not the only one that knows this or teaches this or whatever, it's pretty common for technical analysts. Triple tops are very rare. They happen, like everything happens. It has to happen occasionally, so there's still uncertainty there. It could be the low probability outcome, but triple tops are rare. So as we're approaching, if I wait for the breakout, it should break out on this next move here. Because triple tops are rare. It'd be very rare for it to come up to here and then come all the way back down. So I have that that's bullish. This is a slightly higher low right here. Even highs, you got a little bit of a triangle formation, pennant formation right there. That's a bullish pattern. If it breaks out the upside. And again, if it breaks up to the upside, you can take the base of that triangle, project that upward, and that gives you a target area of what you might expect it to go to if it breaks out. What I also like is look at the smaller move over the last couple of weeks, impulsive up, corrective. What I really like, what I hate is when a stock gets up to a breakout point. It gets up to a breakout point. It's already, well, let's do a triple top here. It's already been moving up for like 3 or 4 days in a row, and then it breaks out in a big way. It's already been going up for, I don't like a stock that's gone up 3 days in a row. I don't like to enter a stock that's gone up 3 days in a row. Because if you look at the odds there, it's very likely to pull back or move sideways for a couple of days. And again, this is very short term. If you're long term, you don't care because I'm going to be in this for the next 6 months anyway. But a shorter term analysis, I don't like those type of breakouts. What I like, if it does do that, what I would do is I'd wait until it pulls back to the breakout area. We've seen a few examples of that. And then I'd enter there, because it's corrected now, and then it's confirmed the breakout, and then that's where I'd want to enter. Or I'd like it to get up to the breakout area and correct first. And then when it breaks out, you could buy the breakout then because there's some room for it to run. Okay. And that's what you have right here. It's moved sideways. You also use whenever you see a stock moving sideways, pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it starts moving sideways. A lot of bullish things I'm seeing in that pattern right there. You got a bowl shape, maybe a cup with handle formation, although that's a pretty deep handle right there. But you could call it that pattern. But all this really hinges on can it break out along with everything else we've analyzed with the market and all that. So be smart if you're going to consider that one. But I like that pattern. All right, a couple more real quick, and then we'll wrap up. Computer and technology. I like this AEHR. And again, this is a common theme. Might want to wait for the breakout, but again, up, pull back, up. Now, it didn't come all. You don't always have to come all the way back to the breakout area, by the way. But this looks like it corrected that. It broke out. This looks like maybe A, B, C. Now, if that is the case, again, notice the way B came all the way back up, and maybe even intraday went a little bit higher there. But that's all the reason to wait for a breakout too. Wait to see if it breaks out again. That would kind of confirm that as being an ABC pattern. Market would probably be breaking out as well. You wanted to get an idea of where it could run up to. You could look at how it's bounced off of that trend line almost perfectly all the way up. You could extend that line out, which may not give you a lot of room there if it breaks out, but doesn't always mean it's going to bounce back down either. Or it could mean that if you bought it on the breakout, put your stop down below here, you're giving it room to come back up here and then correct and give you a higher low. You might have to just kind of wait through. You're going to have to wait through fluctuation anyway if you're going to stay in something for a long period of time. You have to allow for corrections. You could look at a longer term chart for a target area. Oh, this has been going up for a long. That's a nice uptrend. Nice base out of here. Let's go to a 2-year chart. Yeah, this thing's. Now here's where you could look at longer term that, at some point it may that could have been it. It doesn't have to come all the way out to the breakout area to retest it. That could have been it right there. You could take the base of the top and bottom of that move and project it upward to give you a target area longer term. That's a nice looking pattern there. And last one, EXTR right here, Extreme Networks, 95 strength rank. And again, possible inverse head and shoulders pattern. Moving possibly, this is more of an inverse head and shoulders pattern than a bull pattern, but if it does break out, now here you'd say, well, it breaks out, you can take the top of the neckline to the bottom of the head and project that upward. Yeah, but you have pretty significant resistance there. That might only make a run up to that area there. So this maybe doesn't have the best, but it could break out of that too. And if it does break out of that, you could use kind of the bull. It could go up about the same distance. And usually on these though, you have these really big intraday lows. I usually don't factor them in because it's so extreme. Now, if it's just a minor intraday low like that, I would use it. But remember, some of these stocks, I don't know if you remember a couple of weeks ago, they had that glitch that happened right at the market open where some stocks were halted and they had these just wild moves when they started trading again, and some of the orders were canceled. They weren't even real trades that were allowed to go through. That's what can happen when you see these. That could have been what happened that day. That might have been the day that all that happened. I can't remember what day it was, but so I would probably just cut that out and just focus on this area right here if I were making measurements. All right, that's all I have. We'll see what happens. Now, remember, Monday's a holiday. The market will be closed on Monday. I forgot to mention that at the beginning of class for President's Day. But we will have class on Tuesday, and that'll be the first trading day of the week. We'll see what happens then. Have a great week, everyone, and have a safe holiday weekend, and we'll see you back here next Tuesday for the market update class. Bye now.